What's up, everyone? It's Jeremy here. Hope you guys are all having a wonderful spring. I know I am. That's kind of why I'm a little behind on my schedule as far as my YouTube channel, because I've honestly just been enjoying doing things outside again. So today I want to talk about leveraged ETFs, and for any of those of you that are new in trading and whatnot, leveraged ETFs are a pretty valuable tool. Basically, they're really great for trading or more swing trade, short-term type of investing, specifically double and triple leveraged. If you just do a quick Google search for leveraged ETFs, pretty much the big players are like ProShares and Direxion. They've got a huge list of all kinds of stuff. If you want to track gold, natural gas, oil, tech sectors, yada yada. But basically the way that these things work is they move 200% or 300% the value, the daily value of whatever sector you're looking at. Because these get rebalanced every single day, they really are a perfect tool for trading. In fact, if I look at a quick comment from Rachel Lambert again, she's always asking the best questions. I learn best by doing. This was regarding trading. Where can I practice this or play with just a few $100s? Rachel, to answer your question, you can always look at paper trading if your broker has it, but another alternative, if you just want to play with a couple $100, are these leveraged ETFs. Something like FNGU, and I believe the inverse is FNGD. I believe, I have to double check on that, but that's like the FANG stocks, FANG being Facebook, Amazon, Apple, Netflix, and Google. This set of stocks pretty much just about replicate the NASDAQ 100, probably because they're all in the NASDAQ 100. It's a little more volatile than the NASDAQ 100, meaning it will move up and down a little more rapidly, a little more quickly, specifically because it is just tracking those 4 or 5 stocks. Whereas in the NASDAQ 100 is going to be a little bit smoother because it's 100 stocks. But what's nice about these is they're not expensive. I believe FNGU right now is under $30 a share. So FNGD is the inverse of FNGU. Nice thing about this one, if you have a broker that's not charging any commissions and you want to practice, basically you would use FNGD when FNGU is going down rather than shorting it. It's the complete inverse. It's going to react 100% opposite of FNGU. Nice thing about this one is I think it's under $4 a share right now, and I don't know, the spread is probably around 3%, so that's probably about the most you could lose. If you practiced with one share, the most you could lose, let's see, 3% on a $4 stock is like 12 cents. So not a lot to risk there. This is a great vehicle, as long as you have a commission-free broker, to practice with just a little bit of money. And like I said, FNGU is, I think it's about $28 a share. So, you're not talking a lot of money. That's one of the really nice things about these double and triple leveraged ETFs is, it might sound a little scary because it moves so much more, like 300%. But the thing is most of these ETFs are relatively inexpensive. Most of the time they're under $100. And once they start getting more expensive, they do a stock split to keep the price down. So a nice benefit of trading these leveraged ETFs is you need a lot less money to trade with. And some people might say, well, they could be a little more dangerous. They're only dangerous if you're doing a $100,000 position and it moves 2% away from you. You just lost $2,000. But the nice thing with all these commission-free brokers that we have today is you can practice with one share. I mean, a $3 stock you're not really going to lose much. I mean, even let's say it's $100 and it moves 2% away from you, you just lost a whopping $2. Oh my God. So these things are really great to practice with. Okay, so we've established that leveraged ETFs are great for day trading. They're also very popular for, swing trading and also hedging against the market. Like if it looks like we're going to get a pullback and an investor does not want to get rid of any of his stocks, you can, buy an inverse to the overall market so you can profit while the market is going down. I'm not going to get into that right now, but I want to look at the possibility of long-term investing with leveraged ETFs. If you do any research, everyone is going to say, no, do not do that. I am not telling anyone to do that. That being said, I have been doing it for years. But I also use the technique that I showed in my when to buy or best time to buy stocks video. I'll put a link up there. But basically, I'm buying when the stock is weak. And it has worked out exceedingly well for me. If we look at some historical data real quick, let's say PowerShares, NASDAQ 100. I always talk about the NASDAQ 100 because it always outperforms the S&P 500. Not by a lot, but just by a little bit. And it's kind of my personal benchmark when I talk about the overall market. If we look at PowerShares, QQQ, a 5-year chart, it's done 205%. That's really, really great. That's really good. Thank you, Donald Trump. Let's see. If we look at TQQQ, the same time period, check this out. 5 years, it's done 1,113%. That's it's done 5 times more. So even though it's a triple leveraged, it's done 5 times more than the. It's done 5 more times than what? The regular NASDAQ 100. And that is because of the rebalancing that I talked about earlier. Basically, when it's getting rebalanced, we've just had the right amount of bull days to make it go past 300% in the long term. If we look at triple Q, TQQ, from when this ETF went online, and I am not telling, I really want to make a disclaimer. I am not telling anyone that they should hold these triple leveraged ETFs long term. I have, like I said, but I know when to buy them. I would much rather put my money in this than crypto. A lot of people are going to crap on me for saying that. I don't really care. That's my personal opinion. Crypto, I think jumping on the bandwagon after a lot of these have possibly already maxed out. I mean, I have no idea what's gonna happen with crypto. So, but that being said, if you bought back in 2009, it looks like it was February of, 2010. It's gone up over 10,000% in 11 years. TQQQ. So even though we've had some really big pullbacks, like last year, COVID, that was huge. The value on this thing, it took it went from $60 to $20 a share. That's bad. Yet it bounced back from 20 all the way up to where it is now over $100 a share. So it's done 500% in the last year. So you might be asking, hey Jeremy, why don't I just buy double or triple leveraged ETFs that represent the overall market? Because theoretically, well, not just theoretically, but realistically, you can still lose money because the way they are rebalanced, Well, think about this. If a stock, let's say it's $100, it's trading at $100 a share. You buy it at $100 a share. It goes down 50%. So now the price is $50 a share. It has to go up another 100% to get to $100. A lot of people, this always throws them off. I've asked this question before. They think, well, no, it'd have to go up 50% because it went down 50%. Well, what's 50% of 50? It's 25. So if it went up 50%, you're still only at 75. That's 25% less than where you started. So take that scenario with a stock going down a certain percentage and you're holding a leveraged ETF long term. Well, let's say the overall market goes down 10% in one day and you're holding TQQQ long term. Now that position, instead of 10% down, is down 30%. Let's say the next day, same thing happens again. So that position now, which is now worth 70% of what it was the day before, is down another 30%. Start doing the math and you can see how things can go south very quickly. And the reason for this rebalancing and the natural decay of leveraged ETFs, they are strongly recommended to not hold long term. So like I said, I am not telling anyone don't go out and buy double leverage. By the way, double leverage of QQQ is QLD, I'm pretty sure. But if you're interested in any of these leveraged ETFs, look up, just Google leveraged ETFs. Look at ProShares, look at Direxion. Those are some really big players in the leveraged ETF sector. Like I said, there's all kinds of stuff. I would not necessarily do something that moves a lot and doesn't have a steady history. But if you were to do something that, like the overall market, and you are buying at the right time, I think it's a lot smarter than doing a lottery ticket or crypto, in my opinion. But that being said, I just kind of want to let you guys be aware of these instruments for investing and trading. Anyway, I'm going to stop talking. I'm in a really great mood. The weather is fantastic. I'm going to jump in my car, go for an adventure, do something fun. The reason I can remember is because I am retired. So if you guys are smart with your money and you invest, you'll be able to do the same someday. So start investing now if you have not. If you need any help, just watch a bunch of my videos or hit me up in the comments. I am glad to help. Please like, share, and subscribe if you found any value in this whatsoever. It helps me out so much. I would really appreciate it. And until the next time, I will see you later. Bye-bye.